Yo, what's good? What's happening? What's popping? Y'all know what it is. It's got like 3 7, it's got like 777, especially in Zama. Yeah, that's the intro. So, yeah, guys, this is me is him, and we're about to analyze this little thing called NASDAQ. I really love NASDAQ because you get. Actually, I'm not analyzing, but you'll see as the video goes. But I'm actually. I had a video on. Let me show you guys. Let me show you. Because I know I'm not going to leave the link in description. There's the video how to trade a consolidation, order flow stacking, stop hands, yada 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 yada. And then then I made the update video. Yes, this was the update video, and yeah, and then now this is the third part three on how to trade consolidations. If you ask yourself why am I making three videos on the same damn topic, because this is a great discovery, guys. This could really help everyone who gets to know this, because like, come on, let me show you. So if y'all guys remember, we just find a consolidation. We usually find the 4 hour hourly consolidations. We don't really go below hourly. So yeah, so yeah, I'm gonna use the array, horizontal array. No, yeah, I'm gonna use this thing. Yeah, what they call it, bar replay, whatever. So yeah, guys, as you guys can see, there is a consolidation at this current point in time, right? Prices ranging from one price range to another, right? Yeah, I actually got buyers at this point. I got out literally on this candle right here, 80 pips. This thing shot up for 20 pips. It was crazy. So now let me just fast forward a little bit. There we go. There was that candle. Imagine, Lapa got out this candle, 80 pips. So now we understand that there's a consolidation, okay, prices between two areas. So what happens, right? Let me explain the market for you guys, or let me explain what exactly a consolidation or range is, okay? So price works like this. Price works basically, let me say this, the market structure is based on the order flow imbalances or balances within the market, okay? What I mean by that, there's an order flow imbalance, then there's an order flow balance. So remember, when price is going down, like here, when price is trending to the downside, a downtrend, that means there are more bearish, the bearish orders within the market. There's more bearish order flow volume than bullish order flow volume, if you get me, right? So there's an order flow imbalance. Order flow is the flow of orders. Orders are the buy and sell orders in the market. Simple. So the flow of orders, the flow of buy and sell orders, that's what I mean by order flow. And by balance and imbalance, basically that when there's more sell orders than buy orders, price will drop because there's an imbalance in the orders. If, when there's, sorry, I want to find an uptrend, but Nasdaq hasn't been an uptrend for a long time. But when there's an imbalance of buy orders than sell orders, meaning there's more buy orders than sell orders, price will rise, right? But when there's a price balance, right? When there's an when there's an order flow balance, that means buyers and the sellers are within the market and their orders are balanced. So so let's say there's 500 million lots on one side, there's 500 million lots on the other side. So price will stay in the same place, right? It will not move. Why? Because the order flow is balanced. Because as soon as price comes up here, it is met with an equal amount of sell orders, right? Let's say they bought with 50 lots here, right? Buy with 50 lots here, they're met with sell orders of 50 lots here. So Tamaro here bought with 50 lots, and then Sbasha here sold with 50 lots, meaning there's a balance of the amount of orders within the market. So it will stay within this range. So as it drops again, Bob buys and then Jerry sells again. You feel me? So there's a balance of order flow, right? That's what happens within a consolidation. A consolidation, I want you to look at it as in like, you know how a slingshot, right? If you want to go further with the slingshot, you cock it back. That's what basically consolidation is. They're basically cocking back the slingshot, waiting for one of the bears or the bulls to make a move, and then they release. Boom. Right? So now with order flow stacking, this is how it works. Now we realize that at the bottom right here, the fact that there was equal lows or semi-equal lows created, meaning there is a lot of liquidity, order flow, volume, same shit, orders. So there's orders, so there's liquidity at the bottom here. There's a large amount of orders below here, right? So they bought again. Cool, we understand that. Bob sold, Bob sells again. Cool. So now we understand the prices within this consolidation, right? It's coming from a bearish market. It's coming from a bearish trend, right? So we know with the 9 times out of 10, the order flow stacking that's happening here. If you guys understand order flow stacking, I do not want to explain it again, but order flow stacking is basically this consolidation. Remember, because now we understand that there's a stacking of orders within this consolidation. There's a stacking, right? So it's order flow stacking. Order flow, the flow of orders, buy and sell orders. Simple, right? So order flow stacking, right? So we understand that within this order flow stacking, there's bearish order flow stacking because we come from a bearish move. 9 times out of 10, it is bearish because we come from a bearish move, right? A very impulsive bearish move. So what we're seeing is that they're just like, when you're running, like being running, and then all you need to do is just give yourself 2 minutes, breathe in, and then keep running. That's basically it. They've been running. They just want to rest for a little bit. They let price sit in this little range, right? They let the retail traders get happy now. They can actually get in the trades because now they can't really get in the trades when it's trending because it's already falling. Meaning, if you get in sells, you're a late seller. If you get in buys, you're a very early buyer. You feel me? So there's when price is trending, there's literally no one within the market. There's no volume because all the volume is at the origin of that move, right? But when there's consolidation, there's volume because price is within two particular price ranges, right? Meaning it's not going far, meaning a lot of people can get in their orders, right? So Bob here identifies a support, he sells. Jerry identifies resistance. No, I even forgot what support and resistance is. Jerry identifies a resistance. Bob identifies a support. You feel me? So now they weren't able to get in here because it's flipping, it's dropping, But now they're able to get in here. Let me show you again. So we're gonna look at the volume from here to here, the move down. Look at that volume. You see how little volume there is? And then I want you to look at the volume that is within this point and this point. You see the difference, right? You'll see the difference. So yeah, basically that's it. So there's a high amount of orders within the consolidation order flow stacking. So they pause, breathe in, keep running, right? They pause, breathe in, keep running. So how do we now we know it's okay, cool. This is order flow stacking. We've identified the consolidation. We've identified that it is a consolidation. We've identified what type of consolidation or order flow stacking it is. It's bearish order flow stacking because we know it's coming from an impulsive bearish move, meaning the overall move will be bearish. The move out of the consolidation will be bearish. The overall move, the real intended move, the lucrative move, right? But what do we know? We know that now the stop hunt has to occur now. For them to actually take price where they want it, they have to stop hunt, right? Why exactly? Because as I did say, Bob sells, Jerry buys, right? This is Bob sells orders, this is Jerry's buy orders, right? So now literally, Bob here has a lot of sell orders, meaning he has liquidity at this point because that's where his stop is, or that's where he can be forcefully liquidated, blown accounts basically. And there's Jerry's stop loss here too with his buy orders, remember. So for price, for the market makers, for basically the market makers, we'll make it like that. For the market makers to be able to actually move price, right, they need volume, liquidity, right? Liquidity, right? Our orders, that's what they need. Orders. So they need sell orders, right? Let me put it this way, right? For them to enter their sell orders, they need opposing buy orders, right? And then for them to enter their buy orders, they need opposing sell orders. Because remember, you cannot buy 0.01 worth of Nasdaq. You cannot buy 0.01 worth of Nasdaq, right? Out of the blue, because someone has to be willing to sell 0.01 worth of Nasdaq to you, so you're able to buy it. You dig? So yeah, basically it's a zero sum market, guys. So meaning like the amount of liquidity or the amount of money within Nasdaq, or let's say the amount of money within the markets, will stay consistent throughout. So let's say there's 10 accounts with $1 million each, so $10 million within the markets. At the end of the week, there will be $10 million within the market still. But one account might have 3 million, one account might have 4 million, one account might be blown. You feel me? There's still the same amount of money or order flow or whatever, but it's in different hands now. That's what I mean by zero sum. You feel me? So yeah. So what do we look for? So remember, there's rules when we're trading our consolidation. You feel me? So there's the consolidation. Okay, there's the consolidation, right? Then there's the real intended move. Then there's the where it's coming from, the bearish move. So you understand there's orders here, orders here. So what do? Now what they need is they want to enter sell orders, right? They want to enter sell orders to continue price downwards, right? Okay. So now we do see there's a high influx of sellers at this point, right? There's a lot of sellers here, meaning there's a lot of buy orders at the top here, right? So they wanna buy into all of these sell orders right here, right? Buy within all of these sell orders right here, trigger the buy orders. Once the buy orders is triggered, right? Remember, so now there's something called time compression happening. When there's a lot of orders within the market in a small amount of time, meaning there'll be sharp moves. Meaning now, remember when they buy through this resistance, quote unquote resistance, the sell orders here. So if the sell orders are triggered already, when it's here, a lot of people are selling already, right? And then it gives them like a wick, they sell more. You feel me? Then some people already have their sell limits or their sell stops at this point. Some people have sell limits below here. So let's say price is here, then they have sell limits. Price goes a little bit down their way, they triggered. Meaning a lot of people are in sell orders at this point, meaning there's so many buy orders, stop losses, because their stop losses are buy orders, right? So as price goes up here, the buy orders are triggered. It causes a sharp move up because now they stop hunting all these people. So as they go into these buy orders, it already causes time compression, meaning now it shoots up, finds an area to sell at this point, an order block, a basing order block usually. And then now what do we understand? Right, there's buy a lot of people are liquidated here, so now they have the liquidity possible for them to actually enter the sell orders because they got their opposing buy orders. Yeah, dig? Yeah. So they got their opposing buy orders. Now they go ahead with the real intended move. They right, because now they're the only people here at this point selling, because everyone else is like, okay, cool. Now it's chosen the direction, it's reversing. Everyone's like, it's reversing, it's reversing, it's reversing. Now everyone wants to buy. So the late buyers, right? The late buyers are buying. I cool. And then boom, they slam it down. Slam it down. They've already got liquidity from the stop hunts. They got liquidity from the early buyers or the late buyers. Sorry, the late buyers, right? And then they also get the liquidity from the sell orders here, because as from the buy orders here, because as price goes down, more people are buying, and then boom, they get stopped out liquidity. So with one move, with this one move right here outside the consolidation, imagine how much liquidity has been acquired by the market makers, meaning they are able enough to actually enter bigger lot sizes because now they have a lot of liquidity behind them. They're able to enter a lot of bigger lot sizes so they can actually take the move down. You feel me? So there's the move where price is coming from, there's the consolidation, there's the stop hunt, and there's a real intended move, right? And this was simple. First of all, first of all, remember, I'm Bob. I'm now selling with my stop loss here. That's my buy order and my TP down here. Consolidation, right? Cool. Don't mind the dogs. And then boom, this candle entices Bob even more. It's either Bob tells his friend to come sell Nasdaq more, right? Bob tells his friend come sell Nasdaq more, or Bob sells more, right? Now there's so much liquidity within the markets, right? Bob's still optimistic, Bob's still optimistic, and then boom, Bob's still, Bob's still chilling. Bob's still chilling, man. Bob's actually, it's like playing in this area, meaning it's getting more liquidity. And then eventually this happened. Don't you see, like, look at it, this move compared to, like, come on, guys, this is time compression. Because this move right here, look at it, it doesn't even have a wick below. So this hourly candle just opened here, just flew up. That's time compression, right? Because now they have so many sell orders here. All the market needs to do is push it upwards. As it pushes it upwards, it catches the buy orders here, and then boom, it keeps going up because now it's time compressed. Because all these sell orders, their stop losses were buy orders. So we take out their sell orders, we take out their stops. The buy orders are triggered. There's a time compression because there's an influx of a certain type of order. So if there's an influx of a sell order, there'll be time compression to the downside, meaning this move, like you feel me, like a huge move in the side in the direction of where there's an influx of orders. Boom, right? So Bob and his friends got stop hunted, and then now what we look for? We look for the order block. It's an hourly order block for price to sell into. You dig? And then it was simple after that. It was simple. It was simple. The order block rules. We look for a 15-minute entry, and then yeah, this was it. I missed this trade today. Look at this. Please look at this. So yeah, guys, this is basically a pattern I've seen repeat itself consistently within the markets, consistently on a daily basis. Okay, I have a minute left. Let me do it here. Y'all remember order flow stacking from this point to this point? Order flow stacking from this point to this point. You feel me? There's a lot of volume, and then there's our OP at the top. Bob and his friends start selling here. They get enticed, then they get taken out quickly, stop hunted, and then the real intended move to the downside. It didn't really touch the OB this time, but you'll see what I'm saying. It's a pattern. I don't know what I'm gonna call this pattern, but it's a solid pattern that repeats day in and day out in the markets. Okay, but yeah, that's 777. Got like 3 sevens. Y'all know what.